moving to the next big and the important chapter called as Pgbp. Moving to the next big and the important chapter called as Pgbp. The first chapter itself starts with the charging section. The first chapter starts with the starting section. Not important from exam perspective, but just to give you a hindsight, some items are taxable for you. Some items are taxable for you. First item is the Pgbp. Then items are coming and saying any kind of indirect tax benefits and all which you have is taxable. Any kind of gifts and all which you get on account of business relationships. Any kind of gifts you get on account of business relationships will become taxable. In this exam, 99% you are getting a question on that. 99% you are getting a question on that because you have 194R coming this year. You have a 194R coming this year, and therefore they will 99% give you a question where they'll come and say some person has given a business gift to another person. What are the implications? You will come and say implications are this person gave a gift to that person, so that person income it is taxable under the head Pgbp. Because this person has given a gift, he also has to deduct TDS at the rate of 10%. At the rate of 10% with a threshold limit of 20,000. Very good. With threshold limit of 20,000. This is what the rules are. Please keep it in mind. Please keep it in mind. Yes, sir. Yes, sir. Yes. This is one thing to keep in mind. And then they're coming and saying, boss, any other items? There are some items called termination or modification of business contracts, etc., and all those. With an important item called government grants. What grants? Government grants. Income tax is coming and saying that, boss, if you have received a government grant, generally it is taxable under Pgbp. But if the government grant is received against an asset, then in that case you will reduce it from the asset. Grant is an income. Grant is an income, so you will reduce it from the cost of the asset. You will reduce it from the cost of the asset. This is what the rules are. Yes, sir. Yes, sir. Yes, sir. Next, this section is also coming and saying that, boss, when you have income from business has to be split into two. One is speculative and non-speculative. Rahul, what is speculative income? Income of those items which are earned without a transfer of, which are transferred without a delivery. It's a transfer without a delivery. Any kind of transaction which you undertake where there is a transfer taking place but there is no delivery taking place, that is called as a speculative transaction. There are some exceptions which they have given from exam perspective. The only thing which you need to keep in mind is commodity derivatives which are agricultural in nature. And second one is derivatives, normal derivatives. They're coming and saying that, boss, if you have a derivatives, it is not a speculative transaction. If you have a commodity derivatives, it is not a speculative transaction. If it is agricultural commodities. What commodities? Agricultural commodities. If it is any other commodities, it is not speculative if you pay CTT. If you pay CTT. What is CTT? Commodity transaction tax. So in simple words, agricultural commodity never speculative. Any other commodity non-speculative if it is CTT paid. If it is CTT paid, this is what the rules are coming and saying. Rahul, what is the big issue with the speculative? They are coming and saying if you have a speculative loss, what do you have? Speculative loss. If you have a speculative loss, it can only be adjusted against speculative income. If you are not having speculative income, then you will carry forward for a period of 4 years. Return filing mandatory. Return filing mandatory. Carry forward for 4 years. Return filing is mandatory when you have a speculative loss. This is what the criteria is. Rahul, I have business loss. Can I adjust it against speculative income? Yes. Yes. The restriction is only for speculative loss. The restriction is not for the other way around. Keep this in mind. People make hell lot of mistakes in this. Okay. You can adjust your speculative loss only against speculative income, but business loss can be done with whatever you want. Yes or no? Yes or no? Yes. If you have understood this, now comes the format of Pgbp. The format of Pgbp basically is a very simple format where they come and say always start from net profit before tax. Add items which are disallowable. Add items which are deemed profits. Reduce items which are allowable. Reduce items which are other head of income. There is no standard sequence in which you have to follow. Any sequence is fine. As long as you keep it in track. In this chapter, we are going to start from disallowances and then we are going to go forward. Yes. So starting from the disallowances part, they're first coming and saying that, boss, if you have any kind of building or any kind of machinery, there are certain expenses which you will always incur, like rent, allowable. Repairs, only revenue repairs are allowable. Capital repairs are not allowable because it will be added to the cost of the asset. Any rates and taxes paid, allowable, subject to 43B. Payment within the due date of return filing. Yes, because it's a tax paid. Tax has to be paid within the due date of return filing. Yes, this is all the conditions is. Then they're coming and saying that Rahul, if this property was used part for business, part for office, part for personal, to the extent it is for business, you can allow, balance will be disallowed. Balance will be disallowed. This is your 3031. This is your 3031. Then comes the most important section from exam perspective called as 32, which is your depreciation. Income tax comes and says that you can claim depreciation only as per the rules of income tax, which means any depreciation claimed as per accounts is disallowable. Any depreciation as per accounts is disallowable. Only depreciation allowed as per Income Tax Act. Rules are very simple. They're coming and saying if you want depreciation, you should be the owner. You should put the asset to use, and you should put the asset to first use. You should put the asset to first use, and you will not get depreciation on two items called as, very good, land and goodwill. Land and goodwill, you will not get depreciation on land and goodwill. This is what the conditions are. If you want to claim depreciation, you have two methods of depreciation. One method is called as SLM, the other method is called as WDV. SLM method is only applicable for power generation units. WDV is applicable for everyone, including power sector. Including power sector, which means power sector can choose between WDV and SLM. WDV and SLM. How do you do SLM method, Rahul? Same accounts. Same accounts, no changes. Same accounts and no changes. How do you do WDV method, Rahul? You have been given a block of asset concept. What concept? Block of asset concept. They're coming and saying that, Rahul, if you want to do depreciation as per WDV method, take your opening block. Take your opening block. Add additions. Add additions. Additions can be of two types. What is more than 180? Put to use is for more than 180 days or put to use for less than 180 days. If you're going to put to use for more than 180 days, you will get full depreciation. When I say full depreciation, it does not mean 100%. It means 100% of the rate given. It means 100% of the rate given. If I say no, Rahul, I have put to use for less than 180 days, they're coming and say, okay, boss, half of the rate given. Half of the rate given. This will give you your additions. Then you will reduce something called as sale value. Then you reduce something called as sale value. Please understand, in your accounts, you would have reduced the closing WDV, block of the asset reduced per income tax Puerto Rico, directly reduce of the sale value. Directly reduce of the sale value. If you still have the block available, if the block is still alive, which means there should be a positive number. Which means there should be a positive number, you can give depreciation on it. Depreciation will be at the rate of 100% on the more than 180 days and opening WDV, and 50% for less than 180 days. Reduce the depreciation, you will get the closing block. Reduce the depreciation, you will get the closing block. Clear? Yes. Looking at the formats, opening WDV means nothing but last year's closing. Rate is the rates which is given under Income Tax Act. Income tax has prescribed some rates. Let's quickly revise. Building is 10. Temporary building. Temporary building. Temporary building. 40%. Understand? No, I told you, when the item can be destroyed faster, rate will be the highest. What is the highest rate? Temporary building is 40%. Yes. Residential building. Plant and machinery. Vehicles. 15. Furniture. Furniture is 10. Intangible assets. 25. Computers. Patents. Patents are intangible assets, therefore 25. Ships. Where are 5, 10, 15? It is 20. It is 20. Ships are 20. Ships are 20. Yes. Mold. Mold is 40. 30. Mold is 30. Mold is 30. Rahul, airplanes. 40. Items which are fast depreciable become highest rate. Airplane and all, tomorrow you won't even know if you're alive in that or not. Yes. Next, books. This and all, no doubt, definitely. Computer software. 40. Computer software is 40. Clear? Yes, keep the rates in mind. Keep the rates in mind. Ella 40 thanda. Any book is 40. It doesn't matter. Okay, in annual publication vechalo okay, ni ICI book vechalo okay. Ella mate naaligu thooki dhaan poda pora. Yes, so all books are 40. All books are 40. Clear? Yes, these are what your rates are. These are what your rates are. In this, you also have some additional rates in motor vehicles. You have some additional rates in motor vehicles where they come and say the motor vehicle is for hire, 15 becomes 30. 15 becomes 30. And at the same time, they have some motor vehicles where they come and say if you have bought it in 2019, put to use before 2020, all those nonsense, not coming for exam. Not coming for exam, you can ignore it and go. Manda half mark. Yes, yes, this is your rates. This is your rates. Then you have opening WDV. Opening WDV is the closing WDV of last year. When it comes to additions, I told you it is more than 180 and less than 180. But how to compute your additions, Rahul? I'm coming and saying find the cost of the asset. Find the cost of the asset. How do you find the cost of the asset? Purchase price. Add indirect taxes which are non-ITC. Then any installation charges, transportation charges, any charges which are incurred up till the date of put to use, any interest cost which is incurred up to the date of put to use, less government subsidy which is directly linked, less income from sample sales, then anything else? One more item is there, foreign exchange fluctuation. Any kind of foreign exchange fluctuation. What is that? We'll discuss. Yeah, foreign exchange fluctuation, that all will become your additions. If you have an additions, no problem. But if you are going to make the additions payment other than by account pay check, account pay draft, electronic clearing system, any other prescribed modes, more than 10,000, one person, one day, the additions will be ignored. Understand, it is not disallowed, it is ignored. Additions will be ignored. This is what the conditions are. And then they've given some special scenarios to you. The two scenarios to keep in mind is, if you have received a building from your personal to office, assume the depreciation for the period had it been in office. The new revised WDV will become your addition block. Second thing, they are coming and saying, boss, if it is not building but a non-resident bringing any asset from outside India to India, assuming that this asset was a part of income tax, what depreciation you would have given, ignore that depreciation, balance will be included. Either tavare, any other asset which you have will be taken at actual cost. Even if you have used a car for 50 years, it doesn't matter what cost you bought it at, same cost will come here. No depreciation, no nothing. Clear? Yes, this is what the rules are. Same rules will apply. If you have taken the asset part for office, part for personal, depreciation will be split accordingly. To the extent it is for office, it will be allowed. To the extent it is for personal, it will be ignored. It will be ignored. You have not claimed a depreciation. This is income tax depreciation. You have claimed, then and only disallow. It will be ignored. Yes or no? Yes. At the same time, I am coming and saying, if you have taken an interest on a loan, which is loan used for asset, then the interest will be capitalized up to the date on which the asset is put to use. Clear with me? Yes, this is what your additions look like. Then you have something called as sale value. Understand, in income tax, what you are going to reduce is the sale value of the asset, not the cost of the asset or the WDV of the asset. You will directly reduce the sale value of the asset in case you have a sales. In case you don't have a sale, it is zero. Just like that, leave it off. Yes, this will arrive at something called as the net block. In this net block, you will claim depreciation. Depreciation are of two types. One is normal depreciation, one is additional depreciation. Normal depreciation is the rates which we discussed. Additional depreciation is only allowed for manufacturing sector or power sector. If you are going to buy any new plant and machinery, I will give you an additional 20% of the cost of the asset. But Rahul, I have put to use the asset only for less than 180 days. You will give 10 in the current year, 10 in the next year. 10 in the current year and 10 in the next year. Rahul, what do you mean by new plant and machinery? I am telling any plant and machinery which is not second hand, not used in office, not used for production. That's what, not used in office. Yes, any kind of machinery which is not a second hand, not installed in office, not a motor vehicle, and last, not claimed 100% depreciation. If you satisfy any of these, all of these conditions, then it becomes a new plant and machinery eligible for 20% or 10% year 1, 10% year 2. Please understand the 10% in year 2 is not the 10% of the next year's opening WDV, it is 10% on the cost. It is 10% directly on the cost. This is what the rules are. Yes or no? Yes or no? This is what will happen. You will arrive at a depreciation, find the closing WDV. Now, please understand, from income tax perspective, closing WDV is the net block minus the depreciation actually allowed. Which means if there is any depreciation which you have disallowed, or sorry, not disallowed, ignored, because it is a personal, you will not reduce it from your closing WDV. You will reduce it only to the extent of the actual depreciation which you claimed. Actual depreciation which you claimed. With me till here? Yes. There is one other change which comes in your SLM method. In SLM method, they are coming and saying that, boss, if at all you have an asset, you are going to do depreciation on each asset, not in a block concept. Not in a block concept. You're going to do it in each method. In that each method, if you sell the asset, you tell me what is happening. You tell me what is happening. If you tell me that, Rahul, I've sold it for a loss. I've sold it for a loss. Income tax will come and say whatever is a loss will be allowed as a deduction in the current year in the form of terminal depreciation. In the form of terminal depreciation. If you have sold it for a profit, then the question will ask you how much profit have you earned. If you have earned a profit up to the cost, then it is Pgbp income. If you have earned any profit beyond the cost, it has now become capital gains. It has now become capital gains. Rahul, what are you talking about? It is somewhere here. Somewhere here. Notice what is happening is the original cost of the asset was 1000, WDV was 600. You are required to show the tax implications if the sale value is 400. Understand what is your WDV right now? 600. What is your sale value? 400. 200 has become a loss. 200 has become a loss. That loss will be allowed as a reduction in the current year itself, saying terminal depreciation. This is same as change in accounting estimates. You are estimating wrong depreciation in the income tax. Therefore, income tax is giving you the balance depreciation. Next is the scenario where it is 900 rupees. Income tax is coming and saying that, boss, you should have got a profit of 300, which is within the depreciation which you claim. Therefore, reverse the depreciation, which means offer it as Pgbp income. Last scenario, I'm coming and telling Rahul, it is 1300. I bought it itself for 1000 rupees. I'm selling it for 1300, which means 300 rupees is capital profit, which means it will go into capital gains. Balance items will be Pgbp income. Balance items will be Pgbp income. Straight, simple, for okay. Yes, yes. In this, they are also coming and saying that, boss, please understand what you have to allow is the asset depreciation from the date on which it is first put to use. Depreciation on the date on which it is first put to use. If the asset is put to use and then stopped using, also doesn't matter, depreciation will continue. At the same time, depreciation will be allowed only from the date on which it is first put to use. But in some exceptional cases, I will also allow depreciation from the date on which the asset is ready to use, which is called as passive use assets. Examples are fire extinguisher or sample machineries, spare machineries or fire extinguishers. In these cases, I will allow depreciation from the date on which the asset is ready to use. The asset is ready to use. In cases of leases and everything, you will get the depreciation to the main owner. I don't care whether it is finance lease or operating lease, unless and until the asset is sold off to the other person, depreciation will still be continued by the lessor. Clear? Yes. The second section which we learned is 32. Now, when you have 32, you may also have losses. Income tax is coming and telling that if you have depreciation and you have incurred a loss in the current year, first weightage of the Pgbp loss will be given to depreciation. Assuming you have a loss of 1000 and you had claimed depreciation of 800 in that, income tax will come and say this 800 will now become unabsorbed depreciation. Balance 200 will be Pgbp loss. Assuming you had a loss of 1000, depreciation you claimed is 5000. Then 1000 will become the unabsorbed depreciation. To the extent you have a loss which can be put into my depreciation, that will become unabsorbed depreciation. Rahul, what is the benefit of having an unabsorbed depreciation? Unabsorbed depreciations can be set off against any head of income other than salaries and can be carried forward for indefinite period of time with a return filing not mandatory. Yes, sir. Yes, sir. This is what your depreciation rules are. Can we go for? Yes. If you have completed your depreciation, the next section is 35. Correct? Huh? Your next section is 35. 35 comes and says scientific research. 35 comes and says scientific research. In scientific research, I told you to ignore the whole chart. The only thing which I told you to remember is any asset 100% deduction. Except for land. Except for land. Goodwill and all is there in scientific research, not in in specified business, not in here. Okay, here it is only land. Any asset is allowed for 100% deduction except for land. That is what the rules are. But yes, it is not just about you incurring an expense, it is also about you giving donations. Even if you give donations for scientific research or social research, also it is allowed as a deduction. No restrictions on that as well. Yes. This is what the rules are when it comes to scientific research. In scientific research, they're coming and saying, assuming you bought an asset. What did you bought? Asset. Assuming you bought an asset, you would have clawed 100% reduction. You would have gotten 100% reduction. If you take the asset and you give it to your non-scientific purpose, if you take the asset and you give it to non-scientific purpose, the block led asset value will become 0 because you have claimed full depreciation. Assuming I don't give it off to my block, but I directly sell it off. What do? I directly sell it off. Income tax will come and say whatever scientific research deduction you claimed will become fully income. But if you sold it beyond the deduction you claimed, that item will become capital gains. Look at the table. See, if you have sold it without using it in the business, you will charge the whole thing into your Pgbp income because you claimed the 100% in your Pgbp income. But if you are selling it beyond your cost of the asset, anything excess will become capital gains. But if you are transferring it to your block without selling it, then the cost of the asset in the block will become 0. Clear? Yes, this is what is scientific research is. Next item comes is your specified business. Income tax is coming and saying, boss, some business I like too much. Some examples are hospital with more than 100 beds, hotels with more than 2-star, warehousing for storage facilities of agricultural produce or sugar. I am not including edible oil. Yes, all these items are there. In these items, income tax comes and says whatever expenses you incur, whether it is capital or revenue, everything will become allowed as a deduction except for land, goodwill, financial instruments. This is what will not be allowed as a deduction. Balance items will fully be allowed as a deduction in the year of incurrence. Rahul, I did not incur it in the current year. I incurred it prior to me starting the business. Claim it in the year of incorporation. Assuming you capitalized it. You can claim the whole thing in your expense. Yes or no? Income tax is coming and saying that, boss, because of this scientific specified business, if you incur a loss, please don't set this loss against your normal business income. Any specified business loss can be set off only against specified business income. Rahul, I don't have a specified business income. Carry forward for a period of infinite years. Return filing mandatory. Return filing is mandatory. Return filing is not mandatory only for HP and depreciation. Everywhere else return filing is mandatory. So here also you have to file return on time, but you will get an infinite set off of losses for a infinite period of set off for the specified business loss. You can set it off against your specified business income. Yeah. Next, they're coming and saying, boss, if you had a specified business asset, if you plan to directly sell it off, then in that case the rules are same as scientific research, which means whatever deduction you claimed will be offered as income to the extent of sales. But if you have sold it for beyond your sale price, then the excess will become capital gains. The change comes when you transfer it to the block. Income tax comes and says, if you plan to transfer it to the block, if you transfer within 8 years, I have a problem. But if you transfer beyond 8 years, I don't have a problem. So income tax is coming and saying, if you transfer beyond 8 years, then in that case to the block you add 0. That's all. But if you plan to transfer within 8 years, I will assume that you never even had a specified business asset. Which means I'll compute normal depreciation. Which means assuming the asset cost was 100, you claimed 100. 3 years later, you sold it off. You transferred it to the block. 3 years later, you transferred it to the block. That day, assuming you had not claimed the whole 100, depreciation block, you would have claimed only 20. How much? 20. Now, you should have claimed how much? 20. You claimed how much? 100. What will you do? 80 will become income. Which means income tax will come and say, do one thing, boss. You claimed 100. You should have only claimed 20. Therefore, 80 I will offer as income. What will happen to the 80, Rahul? 80 will now add to the block. Basically, I am assuming that you should have claimed normal depreciation. Clear, everyone? Yes. Where is it, Rahul? It is here somewhere. Yes, within 8 years, you will take the amount fully claimed minus the depreciation which would have been allowable. That will become your income. The same thing will be added to the cost of the asset. But if you transfer it after 8 years, then cost will become 0 in the block. If the cost is 0 in the block, then the income to be offered is also 0. But yes, please understand, if you transfer this directly off, then in that case, whatever deduction you claimed will be income to the extent of sale price. Yes or no? Yes or no? Now here also the same conditions are there where they have come and told that boss, if you have incurred any kind of expense which you have paid otherwise than by account pay check, account pay draft, electronic clearing system, other prescribed modes, more than 10,000, one person, one day, 10,000 per person per day. In that case, that deduction will not be claimed. That deduction will not be claimed. That expense will be ignored. That expense will be ignored. Clear? Yes. This is your 35AD. After 35AD starts the simpler activities called as 35D, which is your preliminary expenses. This is same as your pre-construction interest. This is same as a pre-construction interest. Income tax is coming and saying that if you have incurred any kind of preliminary expenses, you can claim it over a period of 5 years. What are the deductions you can claim? It is the actual preliminary expenses or 5% of the cost of the project, whichever is, that's all, 5% of the cost of the project. Right side and all is not important because it is Indian company. It is only for final level portion. It is only for final level portion. Talk to the left side. Left side is coming and saying actual cost or 5% of the cost of the project, whichever is lower, will be allowed over a period of 5 years. Next, they are coming and saying you have any kind of VRS scheme. If you have a VRS scheme, any kind of deductions can be claimed over a period of 5 years. Can be claimed over a period of 5 years. Then they are coming and saying, no, Rahul, you have something called family planning. Family planning for inter-syllabus is disallowed. Family planning for inter-syllabus is disallowed because it is only applicable on companies. It is not applicable for others. It is not applicable for others. So in your inter-syllabus, if you see the word called family planning, take the number directly disallow. Take the number directly disallow. Nothing is allowable for you. Clear? Yes. After this, they come and say, boss, you have something called as PF and zero coupon bonds. Zero coupon bonds. They are coming and saying, boss, if you have incurred some zero coupon bonds, whatever is the discount you have given, amortize it over the number of months. Because zero coupon bonds is going to be only for lesser period. So amortize it over the number of months. In the month, if there is more than 15 days, then consider the whole month. If it is less than 15 days, ignore the month. Ignore the month. Simple, straightforward game. Yes. Yes. After zero coupon bonds comes something called as interest on loan. We have already discussed this in length, where I came and told you that if you have incurred an interest on loan, check whether it is for personal or official. If it is personal, disallowed. If it is for official, check whether it is for asset or normal business. If it is for normal business, allowed. If it is for asset, then it is up to put to use. Up to put to use, capitalized. After put to use, allowed. Same as your borrowing cost. Same as your borrowing cost. The only difference is in borrowing cost, they come and say asset is ready to use. Here the asset is put to use. Where the asset is put to use, same logics. Same logic. Clear up? Yes. Now, whenever you're talking about interest, you also have to keep in mind that interest will only be allowed as a deduction in Pgbp subject to the conditions of 43B. Subject to the conditions of 43B. What is 43B? We'll discuss. Yes. This is your interest, and then we have something called as pension scheme. They're coming and saying that, boss, if you want to give national pension contribution to employee, if you want to give a national pension contribution to employee, you can only give contribution to the extent what is permitted under 80CCD. Now 80CCD comes and says you can only give contribution up to 10% of your salary. So they're coming and saying 10% of salary is what you can give. If you give anything beyond that, it is disallowed. It is disallowed. You cannot give more than that. You cannot give more than that. Next comes the most important thing from exam perspective. This has become very famous of late. This has become very famous of late. This is called as contribution to PF. Contribution to PF. Income tax is coming and saying that, boss, contribution to PF can happen from the employer side in two ways. One is that he has taken the contribution of his own contribution. He has taken his own contribution. Second is where he has taken employee's contribution and kept with himself. Kept with himself. Income tax is coming and saying that, boss, if you have your own contribution, deposit within the due date of filing of return of income, you will get the full deduction because 43B. Because 43B. You don't deposit within the due date of filing of return of income, you will get it in the year of payment. You will get it in the year of payment. No problem. Temporary disallowance, you can get it in the year of payment. But the problem comes with the employee contribution. Employee contribution, they come and say, boss, you should have deposited employees' money within the due date of the act. Within the due date of the act. What act? PF Act. It is not IT Act, it is PF Act. You should have deposited within due date of the PF Act. If you deposit within the due date of PF Act, no problem for me, allowed as it is. Okay. It was not my income anyway, so I am not going to do anything with it. I'm not going to do anything with it. But if you make even a single day of delay, whatever is employee's contribution will become your income permanently. Not even one deduction will be allowed to you, even if you make the payment later. It will become permanent income in your hands. Please be extremely careful about this. I remember a question in November 22, I think. I saw a question on this in November 22, where they basically came and said that boss, there is a contribution happening from the employers of contribution of 5,000 rupees. In that 5,000 rupees, 2,000 is employers, 3,000 is employees. 2,000 is employees and 3,000 is employees. Where what happened is they came and said this is the contribution for the month of March deposited by 16th of April. Deposited by 16th of April. The due date as per PF Act is 15th April. In which case what has happened? Employer's contribution, no problem, fully allowed because it is still within the due date of return filing. But employee's contribution of 3,000 rupees will become permanent income. Will become a permanent income where you have to come and say, boss, employer contribution ignore and go, employee contribution permanent income. Be extremely careful about this fact. Yes, sir. Yes. If you have done with what is PF contribution, next comes your bad debts. Next comes your bad debts. I came and told you when it comes to bad debts are allowable if you follow the proper accounting policies. If you follow the proper accounting policies, first accounting policy, you should offer an income. Second accounting policy, you should write off the debt. You should write off the debt. Yes or no? Yes. Two conditions to satisfy. First, you should have an income. Second, you should write off the debt. If you satisfy both the conditions, whatever bad debts you incurred will be allowed. But if you receive the bad debts in the future, this is called as bad debts recovered. In that year, you will have to offer this as income, irrespective of the fact whether you are running the business or not running the business. That is what the rule is. Irrespective of whether you are running the business or not running the business, you will have to offer the bad debt. You'll have to offer the bad debt. At the same time, please understand, if at all you have a bad debt which the assessing officer did not allow, what happened? You had a bad debt, but the assessing officer did not allow. In the year in which you recover, you can reduce it off. In the year of income, you can reduce it off. What is the scenario, Rahul? You're basically talking about a case where, let's assume that the bad debt was 1 lakh. How much is the bad debt? 1 lakh. You tried to claim how much? 1 lakh. Assessing officer only allowed for you 80,000. How much? 80,000. Assessing officer only allowed 80,000. Yes or no? Yes. Now, when you were trying to recover the money, you got in your hand full 1 lakh. No, actually, let's make it 60,000. How much? 60,000. Now, the question which has come to you is, Rahul, I have got a bad debts recovery of 60,000. How much should I offer to tax? I only have to offer 40,000. Why, Rahul? I already offered the 20,000 in the past. Back then time itself, I was supposed to claim 1 lakh. Assessing officer made it 80,000, which means 20,000 technically I offered off. Which means now only I have to offer extra 40,000. Now only I have to offer extra 40,000, which means if the whole 60,000 is there in the P&L, you will allow 20,000 off. You will allow 20,000 off so that the P&L only has 40,000. Clear, not clear? Yes. Next is your other deductions. You can ignore the other deductions. You have residuary expenses. This is your general expenses. If you have expenses and you do not know whether these expenses fall within 30 to 36, it will fall under 37. 37 comes and says that, boss, if you have any kind of residuary expenses, follow the general criteria of accounts. Which means it should be a revenue expense, should be owner's expense, should be for the current year. Other owner's expense. Should be official expense, should be revenue expense, should be owner's expense, should be for the current year's expense. Last item is income tax expense, where they come and say, boss, expenditure should not be in the form of a penalty which is in violation of an income tax act or any kind of payment which is in violation of, it should not be an expenditure which is in violation of any act. Which means bribe, penalty, secret commission, any nonsense is not allowed. Those things will be ignored for you. At the same time, income tax is also given some explanations. You tell the explanations and you tell me whether it's allowed or not. Okay. The first item, they're coming and saying premium paid by policy on key man insurance by a firm or key man insurance policy of partner. Why? You've taken it for your partners, so allowed. Benefit perquisite to a person, acceptance of which is violation of an act, rule, law, guideline governing conduct of such person. Not allowed. Any kind of expenses incurred for compounding an offense. Not allowed. You have gone to the department and come and said, sir, I'll pay lower penalty. No problem, still not allowed. Then they're coming and saying any kind of CSR expenses. Why? It's a donation, not for the purpose of business. Next, any kind of expenditure representing contribution for political parties. Again, not allowed because donation. not a business purpose. Then interest payable as per MSME Act is a special item. It's a special item where they're coming and saying if you had to pay any kind of MSME interest, that is disallowable. That is disallowable. Yes or no? Yes. These are the items given to you. But at the same time, please understand, if the question comes and says that you have interest and penalty, what do you have? Interest and penalty. Income tax comes and says no problem with the interest, disallow the penalty. Disallow the penalty because interest is a compensatory item. Interest is a compensatory item. Penalty is a I forgot the name, whatever it is. Yes, penalty is an item which is not allowed to you. Penalty is an item which is not allowed to you. Interest is allowed as a deduction. Talking about general. Talking about general. General interest is always allowable. Penalties are not allowable. But please understand, if you have to make any payment under Income Tax Act, income tax order, ella payment is disallowed. Income tax order, ella payment is disallowed. We'll discuss that later. Right now, this is what the provisions are. Any interest is allowable. Any penalty is not allowable. Any penalty is not allowable. For ICI inter perspective alone, late filing fees is also not allowable. For what? ICI inter perspective alone, late filing fees is not allowed. Late filing fees is not allowed. With this completion, you have completed what is called as your allowances. What is called as your allowances. Income tax also says that, boss, since I've told about the allowances, I also have to speak about disallowances. Income tax comes and says the first and the biggest disallowance for your exam perspective, which is mandatory coming, is your TDS. Income tax comes and says that, boss, I had asked you to deduct TDS on a person. If I find out that you have not deducted the TDS on the person before 31st March, or if you have deducted the TDS on that person but you did not give me the payment before due date of return filing, then I will consider you as a defaulting person. In which case 30% of the expense in case of a resident and 100% of the expense in case of a non-resident will be disallowed for you in the current year. Will be allowed in the year of payment of expense or TDS. TDS will be allowed in the year of payment of TDS. Look at this example. It's coming and saying that you have incurred an expense in 22-23. You deducted the TDS on 21st October. You deposited TDS on 7th November. Allowable, not allowable? Have you deducted before 31st March of your previous year? Yes. Have you deposited before 31st March, before the due date of return filing? Yes. Therefore, allowed. No problem. Come to the next scenario. I'm coming and saying you have deducted on 1st Jan. You have deposited on 1st August. You deducted on 1st Jan. Have you deducted before the due date? Yes. 31st March ko panita. So therefore no problem. Have you deposited before the due date of return filing? Yes. 1st August then. 31st July is presumptive cases. You have deducted it before the due date of filing return. Generally your due date of filing return is 31st October. If you don't want 31st October, you have to go to 31st July. In 31st July, it's a presumptive case. Presumptive case in the section varadu. So which means your due date for exam is only 31st October. Yes, if you have satisfied both the conditions, deduction is allowed. Then they're coming and saying, Rahul, you've deducted on 5th May. Your previous year or next previous year? Check, no. 22-23 is your previous year. So therefore, allowed. Paid on 10th December, within the due date, after the due date? After the due date, which means will be disallowed and allowed in the year of payment of TDS. When did you pay? 23-24. So allowed in the assessment year 24-25. Next. You have deducted on 9th April. Your previous year, next previous year? Next previous year. Inge stop. You are disallowing. Allowing it in the year of payment of TDS. When have you made the payment of TDS? 6th June 23. The moment you have made a disallowance, it is only allowed in the year of payment. I don't care about due dates anymore. Which means it will be allowed in the previous year, 23-24. It will be allowed in the previous year, 23-24. Yes or no? Yes. Next time coming and saying, boss, I deducted on 26 July. Within your previous year, next previous year. Which means disallowed. The moment I am disallowing, I am not caring about when that payment is happening. I am only caring about I'm not caring about what the due date is. I am only caring about when the payment is happening. Payment is happening in previous year, 24-25. So therefore allowed in the assessment year, 25-26. Allowed in the assessment year, 25-26. Clear, not clear? Everyone? Yes. Now this is what the conditions are for your TDS conditions. In this also income tax comes and says that boss, generally this is what the conditions are. But if at all I find out that the other person, the other person goes ahead, files the return, shows this income, pays the tax and everything, then in that case you can stop the disallowance on the date on which he files the return. He files the return. So if the other person has filed the return, including this income, paying this taxes and giving me the return, I can stop this disallowance on the date on which he files the return. That date will be assumed as payment of TDS. Yes or no? Yes or no? This is what the criteria are. Can we go forward? Yes. If you have completed a 40I, then comes your 48.2. 48.2 simply comes and says, boss, any payment under Income Tax Act disallowable. Any payment under Income Tax Act is disallowable. When I speak about any payment, I mean any payment. Even interest is disallowable. Any tax is disallowable. Cess, late filing fee, penalty, whatever it is, everything is disallowable. It doesn't matter. Everything will be disallowed for you. Please understand at this point of time, also clarifying that any other taxes are allowable. GST and all you can claim. Subject to 43B. Then next items and all you can ignore. Royalty and all you can ignore. TDS default you can ignore. This is what the perquisite valuation is. If you are paying any non-perquisites to your employees, if you're giving any non-perquisites to your if you're giving any non-monetary perquisites to your employees, and the tax on that is what you want to bear. You can bear the tax so that employee can get an exemption. If you are bearing the tax, it will become disallowed for you. Has never been tested in exam. Don't worry about it so much. Yes. And the last few items is called as your related party payments. Income tax is coming and saying that, boss, if you are going to make a payment to your related party, which the assessing officer finds as unreasonable or excessive, in that case, assessing officer can disallow the excess payment. This payment should go to related parties. Related parties means left side of the family, which means spouse, brother and sister, parents, lenient ascendants, lenient descendants. That's all. Left side of Rahul's spouse and all is how left side. She has become left side, ma. Okay, she or he has become left side. Don't discuss about that too much. Okay, after they come to the family, parayadhan only. Parayadhan in Hindi is whatever. Okay, point is she has become a part of your family. So it's still the left side of the family. Understand, in this section, you are only disallowing excess payment. You are not disallowing any short in income. You're not disallowing any short in income. You have to be on the payer side. From a payer side, if you pay more expenses, then it is disallowed. If you are on the income side, it doesn't matter. Even if you get a lower income also, this section is okay. Even if you get a higher income also, the section is okay. The section is only bothered about expenses. With me till here? Yes. If you have completed 48.2, the next one is 48.3, the next most important section from exam perspective, which basically says that if you have a payment which you have to make a person, and the payment is made other than by account pay check, account pay draft, electronic clearing system, or other prescribed modes, more than 10,000 one person one day, in that case, I will disallow that payment. Permanently. At the same time, assuming you have incurred the expense today, but the payment has happened in the next year. Next year I will assume it as income. But here they have given certain exceptions. Exception number 1, they are coming and saying 10,000 will become 35,000 for a transport operator. 10,000 will become 35,000 for a transport operator. There are certain cases where I will not like to get the payment in permissible modes because it is not possible. Some examples are payment made to farmers, payment made for places where you don't have a banking facility. Then employee sent to a rural area where there is no banking facilities, money given to agent, any kind of retirement benefits given more than 50,000. All these examples are there. And I think one other place is there, book adjustments. If you're doing internal book adjustments also, it is allowed. Then they're coming and saying, what is permissible modes for me? It is credit card, debit card, UPI, Bheem Aadhaar Pay, Done? Yes, all these items are there for you. Then they are also clarifying to you that boss, please understand what I'm talking about is account pay check, which means crossed check, bearer check, both are disallowed. Crossed check and bearer check, both are disallowed, both are not allowed. Both are not allowed. Clear, not clear? Clear? Yes, this is what your 40A3 looks like. This is what your 40A3 looks like. After that, I think everything else you can ignore off. 40A7 can be ignored. 43A is what we were discussing. Yes, this is more of a final level portion, but just to clarify to you, since it's there in syllabus, the provisions come and say that if you have ended up buying an asset from foreign country, if you're buying an asset from foreign country and you have bought the asset on credit basis, what basis? Credit basis. If you bought the asset on a credit basis, when you make the payment, you may incur something called as foreign exchange gain or foreign exchange loss. Whatever gain or loss which you have will also be capitalized. I will not claim it as a deduction. I cannot claim it as a deduction. I have to capitalize it off. I will have to capitalize it off. If it is a loss, then you will add it. If it is an income, then you will reduce it. This is what is a simple logic. Idu mattum nyamam vecha porom. Clear? Yes, in case it comes. Generally doesn't come. In case it comes, you just take care of that. Yes. After this comes your next section called as 43B. Next section called as 43B. From exam perspective, there are some sections which are extremely important. Depreciation. Depreciation, scientific research, 40A3, 40A2, payment related parties, 37 and the penalties and all those things, and 43B. These things are the ones which keep coming again and again in life, and they don't have any new ideas also. Same numbers will keep repeating. Okay, sometimes same adjustments will keep repeating, sometimes numbers will also repeat. Depreciation, scientific research, related parties. Related parties 40A3, 40A2, 37 penalty, and then 43B. And TDS, yes, very good, TDS. 40IA. Presumptive is a secondary thing. I'm talking about disallowances. Pgbp compute pannamodu enna varum. Okay, 40IA also. 40IA and 40I, both. TDS also. Yes, these are the things which keep coming, and for some reason they don't have any fresh ideas, so the same numbers will keep repeating. Go before exam hall போறதுக்கு முன்னாடி your last two papers ஓட adjustments பார்த்து போறோம். அதே வந்துரும் திருப்பி அப்படியே ரிப்பீட் ஆகும். Okay, just keep that in mind. 43B is what we are discussing right now. 43B comes and says that there are certain items which will be allowed to you only on payment basis, and payment basis means payment is not today, payment can be up to due date of return filing. What are the 5 items? Our first item I'm coming and telling is any kind of taxes paid to government. Then any kind of interest payable to banks or NBFCs. Then any kind of leave encashment, any kind of bonus or commission. Then any kind of use of railway assets. All these items will become 43B items, which means these payments will only be allowed as a deduction only in the year of payment or before the due date of filing of return of income. If you have incurred it in the current year, you have time until the due date of filing of return of income. You pay until the due date, you will get the full deduction today itself. You don't pay, I will allow it in the year of actual payment. Clear, not clear? Clear? Yes. Now in this also they are coming and clarifying that, boss, whenever you talk about interest on loan, I am meaning interest on loan. If you have converted the interest into a loan also, it doesn't matter. Even if the interest has been converted into a loan, which means you have gone to the company and you have gone to the bank and come and said, sir, I don't want this interest anymore. Capitalize it as a loan. In that case also, I will not allow the deduction of the interest unless and until you repay the loan. What example is this? You're looking at the bottom example. It comes and says, Mr. Punctual has not paid interest due to ABC Bank for the over 5 years, which has been disallowed in 43B. Then they're coming and saying that interest payable is 6 lakhs per annum, which means 5 years is 30 lakhs. Where was I? ABC Bank and Mr. Punctual enter into a loan restructuring wherein the interest due would be payable in 30 monthly installments. Now what has happened? Interest has become a loan. EMI loan. It has become a EMI loan. If Mr. Punctual is paying 10 installments in previous year 22-23, can he claim the whole 30 lakhs or can he claim only the 10 installments? He can only claim the 10 installments. What will it be? 30 lakhs into 10 by 30. Which will become 10 lakhs. Will become 10 lakhs. Therefore, 10 lakhs will be allowed in the current year. Balance 20 lakhs will be allowed in the year of payments. It's an amendment in the current year, so be careful. Okay, there are some small amendments. Loan ku thavara depreciation debenture ella potrukanga. Adu mattum paathukonga. Okay. And done. I think yes, this is pretty much your PGBP chapter from the computational perspective. Coming to the more procedural aspects, procedural aspects like income tax is coming and saying that boss, where is it? Yes, on the procedural aspect, they're coming and saying, boss, when you come and do Pgbp, you have two kinds of items. One is called maintaining books, one is called as audit of books. In maintaining books, they're coming and asking me, tell me who are you? Tell me who are you? Are you a business person or are you a professional person? Or you a professional person? Profession has been defined as certain people, accountants, engineers, lawyers, doctors, architecturers, all the vocational people, any kind of camera people, film, cinematographic film people, film actors, cameramans, directors, producers, etc. Yes, these are all your notified professionals. Income tax comes and says that, boss, if in the last 3 years, all the last 3 years you have had a gross receipts of more than 1,50,000. All the last 3 years you've had a gross receipts of more than 1,50,000. I will tell you what books to maintain. You have to maintain that books. What books, Rahul? Cash book, journal book, ledger book, carbon copies, bill copies, bill copy and all those things. Some important items are your inventory register, medicine register, daily case register. What register? Daily case register. It is not daily cash register, it is daily case register. This daily case register is only for medical people. Yes, so for all those people you have to maintain that. MCQ question, nothing else. Yes, now they have come and said that, boss, if you have a gross receipts more than 1,50,000 in all of the last 3 previous years, you have to maintain books, and I will tell you what books to maintain. Assuming you don't have this more than 1,50,000 in last 3 years, I will also check for whether you are expected to have 1,50,000 in the current year. If that is also there, then also I want you to maintain books, which I come and tell you. Assuming you say, no, Rahul, I am not having in the last 3 years also, I am not expecting in the current year also. In that case, I will come and say, no, you have to maintain books, but I will not tell you. You maintain whatever books you want. Tomorrow, assessing officer, if he comes and asks you for something, you should be able to support it. Yes or no? Yes. Coming to the business part, they're coming and saying, boss, split yourself into individual HUF separately and others separately. Check for the sales also and the Pgbp also. They're coming and saying, if I find out that your Pgbp is more than 2,50,000 and turnover is more than 25 lakhs for individual and HUF, or your Pgbp is more than 1,20,000 and turnover is more than 10 lakhs for other people in any of the last 3 years. What year? Any of the last. 1 year also enough. In that case, I will come and tell you that you have to maintain books. So what books to maintain? I don't have to tell you. You maintain whatever books is required. You tell me, Rahul, no, this is not happening. Then I come and say, I will check this for the current year as well. In that also, if it is satisfied, then also you have to maintain books. You tell me, Rahul, this is also not getting satisfied. Then I'll come and say, no, required to maintain books. So forget it off. Not required to maintain books. You can ignore it off, because anyway you are going to fall into presumptive. Pgbp 2.5 lakhs kamala kuda polena onno aga poradilla. Yes or no? Then you're going to fall into presumptive models. Yes or no? Yes, they're coming and saying, boss, if you don't maintain books of accounts, you have to maintain a books of accounts for a period of 6 years. I thought penalty is there. New syllabus. Okay, good for you. New syllabus la penalties alla notify pannirukanga, old syllabus la illa. In that time pass pannittingna nalla irukum. Yes, the next part is, if you maintain books of accounts, you have to also do audit. Now on audit, they are coming and saying that, again I'll have to ask you whether you are into business or profession. If you are into profession, I'll come and say you have to maintain, do an audit if your turnover is going more than 50 lakhs. If you are into business, I'll come and tell you that you have to do the tax audit if it is more than 1 crore. But if I find out that your cash payments or cash receipts, is not more than 5%, then in that case I will permit this tax audit only after 10 crores. Now please understand, the cash receipts or cash payments is 5% of, cash receipts is 5% of receipts, cash payment is 5% of payments. And when I use the word receipts and payments, I have no criteria as to what receipts are you talking about and what payments you are talking about. It can be a capital receipt also, it can be a revenue receipt also. Okay, the total cash receipts which I make should be less than 5% of the total cash total receipts which I have in the current year, and the total cash payments which I make should be less than 5% of the total payments I make in the current year, whether it is capital, revenue, doesn't matter. Okay, if that is happening, then in that case you will have a turnover of 10 lakhs. Now please understand, when I use the word cash, account pay check tavara, bearer check and cross check is also considered as cash. In simple words, permissible modes. In simple words, permissible modes, you should have payments more than 95% in permissible modes. If you have your payments more than 95% in permissible modes, I have no problem with that. I have no problem with that. Clear? Yes. At the same time, they're coming clarifying that boss, these tax audit conditions will not apply in case you opt for presumptive taxation. In case you opt for presumptive taxation, in case you are liable for a tax audit has to be submitted 1 month before your return filing due date. Since your return filing due date is 31st October, you have to submit 1 month before, which is 30th September. Now only due date got over. Okay, and everyone is making a human cry today. Today is the next day of the tax audit due date, right? Everyone in CA world is making a human cry saying we have not filed our tax audit reports. Please extend the due date. Not happening. Okay, go see the market now. You'll know. Every CA firm they are going and protesting right now. Na panla. Unakku yaar panna solla. Pandirukkumonla. Kadasi varaiku thoongirpaanga. Anyway, the point is this is what your tax audit looks like. Coming to the next part where they're coming and saying, Rahul, so much we learned in Pgbp, so much information to keep in mind. I don't think I am capable enough to do it. Income tax is no problem. You will not be capable only if you're poor. I will tell you when you are poor. I will tell you when you don't have to do all this. Yes, which comes in the concept of presumptive. Where they're coming and saying that if you are into business, and I find out that your turnover in the business is less than 2 crores. How much? 2 crores. If your business is less than 2 crores turnover, then in that case, I'm coming and telling that boss, no problem. You don't have to maintain books of accounts. You don't have to get them audited because I'm making you under presumptive taxation. Where the rules come and say that whatever is your turnover, 6% of that I want as Pgbp income. Only if I find out that the turnover is received by permissible modes. Only if I know that the turnover is received by permissible modes and the money is received within the due date of filing of return of income, which is 31st July. Within 31st July, you should have received your permissible mode payments. Within that, if you do, then your turnover will become 6%. If you don't satisfy the condition, it will become 8%. They're coming and saying, boss, satisfy these two conditions. You are not required to do any books of accounts. You're not required to do any tax audit. I don't want you to do Pgbp income also. Your advance tax due date will become last 15th March. Nothing else is required from you. You can do your life simple as that. But if you want to make it complicated and offer lesser than what I have told you, two things to do mandatory. One, maintain books of accounts. Second, get it audited. At the same time, I'm coming and clarifying that, boss, if you have chosen to be in presumptive, stick with me for 5 years. The year when you choose to betray me, from that year for the next 5 years, I will not call you back. Which means if you have chosen to opt out of presumptive in any of those 5 years, from that year to the next 5 years, no more presumptive for you. Mandatory books, so mandatory audit. That's what the criteria are. Yes. Next, they are coming and saying that, boss, if you are not into business, but you are into profession, then in that case, I'm coming and saying, I want 50% of your turnover as profits. Subject to the condition that the turnover should be up to 50 lakhs. If your turnover is up to 50 lakhs, 50% of the profit turnover you give me as profits, I will let you go. I don't want books from you. I don't want audit from you. Same conditions as 44 AD. That last 5 years of the concept alone is not there. And the 5 years of the block alone is not there. Balance everything is the same. Please understand, this presumptive criteria are only for individuals, HUF and firms. Only for individual HUF firm. Firm la kuda LLP it is not there. LLP it is not there. For any other people, presumptives are not applicable. Clear with me? Yes. And the last presumptive comes back to you. The last presumptive comes and says that, boss, you are into transport business. What are you into? Transport business. Income tax comes and says that if you are into transport business, I will come and check how many vehicles you have. If you come and tell me that, Rahul, I don't have more than 10 vehicles at any day during the previous year. Not more than 10 vehicles, I will say you are eligible. In which case I will ask you to split yourself into light good vehicles and others. Heavy good vehicles and others. Heavy good vehicles are defined as those kind of vehicles whose capacity weighs more than 12 metric tons. tons. If you are found out to have a heavy good vehicle, I want 1000 per ton per truck per month. 1000 per ton per truck per month from you, mandatory. And if you have anything other than a heavy good vehicle, I want 7500 per month per truck. 7500 per month per truck from you, mandatory. If you give me this much income, I will let you go. I don't want you to maintain books. I don't want you to get them audited. I don't want Pgbp income also from you. I don't want Pgbp income from you. This will become my Pgbp income. This will become my Pgbp income. Now, please understand, when I spoke about per month per truck, I am talking about per month per truck when you owned it. When you owned it, I am least bothered about when you put to use. I am least bothered about when you put to use. If you bought the asset in April and you put to use in July, I will still compute income from April. I will still compute income from April. And second thing, they're coming and saying, Rahul, I will take income for the whole month, even if the asset is there for one day. Even if you bought the asset on 30th April, I will still consider that applicable for the whole month, which means for the whole month, you are liable for 1000 per month per truck or 7500 per month. Simple, straightforward rule. Simple, straightforward rule. The only exception or the difference between this and the 44AD and 44ADA is that in those two scenarios, advance tax was only one installment. Here, advance tax is all 4 installments. Advance tax is all 4 installments. Second thing, they're coming and saying, if you are into a firm, you have something called as interest on capital and salary. Yes, those two things were not allowable in 44AD and ADA, but can be claimed in 44AE. Can be claimed in 44AE. Now, Rahul, what is this salary and interest? Let's discuss. The provisions are coming and saying that if you are not an individual, but you are a firm, if you're not an individual, but you are a firm, in that case, income tax is coming and saying that, boss, whatever profits you give from the firm is exempt for the partner. But whatever interest you give from the firm will be deductible for the firm, will be taxable for the partner. Whatever salary you give from the firm will be deductible for the firm and will be income for the partner. How do you compute this, Rahul? They are coming and saying, boss, whenever you get any kind of interest, it is deductible up to 12%. It is deductible up to 12%, which means partner can also be taxable only up to 12%. Yes, this is what the rule is. Coming to salaries, the question is coming and saying, before even you start salary, you have to check whether this is permissible as per the deed. So they have put some conditions. Condition number 1, they're coming and saying you can give salary only to working partners. Condition number 2, they're coming and saying salary can only be given to those partners which are authorized by deed. Condition number 3, they're coming and saying even if the salary is authorized by deed, you can only give it prospectively, you cannot give it retrospectively. In that case, they're coming and saying, boss, if you want to compute your salaries, tell me what is the profit of the firm. How do you compute the profit of the firm, Rahul? Pgbp income of the firm. Full Pgbp income of the firm, disallowing your salary which is already debited. Take the full Pgbp of the firm, disallow the salary which is fully there, you will arrive at your book profit. With the one exception that if you have unabsorbed depreciation of previous years, that has to be reduced. Only for the purpose of computing salary. After you compute the salary, you can leave it away. Only for the purpose of computing salary, you have to reduce your unabsorbed depreciation. Please do not reduce any other loss. Only unabsorbed depreciation. You will arrive at a book profit. Follow the slab model. For the first 3 lakhs. It is 90% or 1,50,000, whichever is high. Rahul, how to remember high or low? Understand, if the firm does a loss, you still have to pay them 1,50,000. That is what the logic is. Therefore, it is whichever is higher. So for the first 3 lakhs, it is 90% or 1,50,000, whichever is higher. Anything beyond the 3 lakh rupees, it is 60%. Add both the salaries, check with the actual salary you are planning to give, whichever is lower. That will be allowed as a reduction to you. That will become a new Pgbp income. That Pgbp income will be allowed as a deduction in your hands and will be taxable in the hands of the partner. In their own slab rates. Under what head? Pgbp. Salary paid to partners is taxable under Pgbp head. Clear with me? Everyone? Awesome. This marks the end of your chapter called as Pgbp. Any doubts? All clear? Yes. Last thing before I move to the next chapter, which I want you guys to please keep in mind, is this chapter is the favorite chapter for ICI, not because it is tough. It is because they play around a lot. They play around a lot. They have a very different mechanism to play around, and you have to be extremely careful on what you're talking about. Okay, you cannot complete this chapter in exams unless and until you know proper accounts. Proper accounts. In some places, ICI will come and tell that the income is given to you, which already includes these items. In some places, they'll come and say this item is not included. In some cases, they'll come and say exclude this item. Some cases, they'll come and say include this item. Unless you clearly understand what you would have done in accounts, you cannot do income tax. Be extremely careful about that fact. In simple words, if the question comes and says that there is a net profit, there is a net profit without considering the salary to partners, will you again disallow salary? No, because it is still not there. It is not there. Whereas they come and say net profit after considering the following items, adala salary kuttirkarna, you have to disallow. Clear, not clear? Yes. At the same time, they may also come and say this is the net profit without considering profit given. And if you find out that the profit is not taxable under Pgbp, will you again reduce? No. In that case, you let it go. If they say no, net profit is after considering this profit, then in that case, you will do reduction from here and move it to other head. So you have to be extremely careful about what the net profit is given and whether the item is there in the net profit or not. Then decide whether you have to remove it or not remove it. Clear, not clear? Yes. At some point of time, you may also come across scenarios where ICA may have not clarified it itself, saying that whether it is included or not included. You are free to make your own assumptions. The general policy is, if the question comes and says net profit after considering the items, it means these all items are there. And then if they give you the word called as additional information, that means that's a break point. From there, whatever items are there are generally not there. Which means these items are extra to be taken. Unless and until clarified. Clear, not clear? Yes, keep that in mind. With that, if you do, Pgbp will come properly well. Okay. In case you are not confident about it, I think we have done a good amount of comprehensive questions. Please solve all the questions once again, just to see where you stand. Because I think there are about 18 to 20 questions in that. In that 18 to 20 questions, we have already done, like, some places they'll be included, some places not included, some places added, not added and all. Be extremely careful about it. Yes or no? Yes. And be careful about the wordings you use. If you use the word disallowed means it should be there, then only you disallow. If it was never there, don't disallow. You'll use the word ignored. If you are having that item and you want to remove it, then you will come and say allowed. You'll say, if you have an income which you have to remove, then you'll use the word allowed. If you have no expense claimable, but you want to claim something now, that is also called allowed. Simple example, scientific research capital expenses. Will it be there in the net profit? No, which means you have to allow it. Keep that in mind. Clear? Yes, using of words are more important. Ideally, the answer will remain the same, but your English will help you make an impression before the examiner. Okay, so that impression carries marks also. Okay, sometimes that impression also carries marks, because at the end of the day, you have to pass also. Yes or no? Yes. All clear?